Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 2nd of December, 2023. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of December. And this time, the Euro is looking different from the other two, and on the last second half of the week, it has actually turned around after hitting spiking through the 110 and has pulled back quite significantly all the way back down to almost retest, yes, this upper channel trend line. And that was due to the Eurozone CPI data, which came in lower than expected. So there's some hope that there could be end of rate hikes and could be a pause and possible rate cuts in the future. Whereas the pound sterling and the Aussie dollar gain over the US dollar and climbing up to test recent highs. So they have gained against the euro as well. And we'll see how that is reflected in the US dollar index against the euro especially. And let's review last week's news triggers, which was mainly the PCE core inflation, core PCE price index, and as well as the Eurozone CPI. And looking forward to this week, there's only a couple of news, and the key one will be on Friday, non-farm payroll report. That will be another key indicator for the Fed for their next meeting the following week. All right, so let's go ahead and preview that. Last week for the Australian and Eurozone CPI data, both economies came in with lower than expected figures, so raising hopes at least for the short term that the RBA may just pause and hold rate steady after their previous hike last month. And as well as the Eurozone, where it has also significantly dropped and also possibly could influence the ECB to also pause and try to project the next potential rate cut for next year. Similarly, for the US, the core PCE price index has remained fairly constant over the last few months, between 0.2 and 0.3%. And this is still a concern for inflation. However, the rest of the indicators for the economy is not so good, with the ISM figures lower than expected, and especially manufacturing still contracting even with low forecast. Although the GDP figure was slightly higher than expected, so let's see what the final figure will be towards the end of this month. So this coming week, we've have the RBA with their rate decision, and expected to hold rates as it is after the previous month's increase. And there's services figures coming up. with forecast of slightly higher than the previous month's actual. So this could be in line with the GDP, but we'll see. And forecast for the non-farm payroll, the jobs figures also higher than the previous month's actual, which was significantly lower, which was a surprise. So we'll see if it's going to meet that, or market is not expecting to do too well with the recent news on the economy. So should not expect it to be over 200K. Right, so this week we'll see how the US dollar responds, because it did dip and managed to recover. So we'll take a look at that on the DXY. Right, so critical week coming up, one week, couple of weeks before the Fed's meeting in the middle of the month, and starting off with the RBA. All right, let's move back to the analysis. Let's start with the euro. And after the start of the week, it targeted the 110, expected the as a key resistance zone, that's and was rejected and started to pull back with some early news from some of the European countries with lower CPI figures. And then the Eurozone data came out on Thursday, and it was significantly lower than expected. And that's the result, with a strong pullback and continued lower to spike below the 78.6 fib, and to retest this upper channel trend line. So into the interim support zone just above 108. Major support is still at the 62 fib, and that's the, we'll see if we'll need to shift this fib for now. But anyway, let's take a look at the weekly time frame first. And that was the result. It spiked through the hit the weekly 200 EMA exactly, and then started pulling back into the 78.6 and back into the upper channel trend line. So that's a very large spinning top here. This week is likely just going to be consolidation. And it's going to be around the 109. So unless it weakens further and dips back below into the rising channel to hit the 108, which means the US dollar will have to continue to recover as well. Now, if we shift this to retracement, and that aligns with 38 fib retracement here at the 108. And just above the 50 fib, there's the grouping of the 200 and 55 EMA, which should be able to be a strong support level, support zone. So let's see, without any Eurozone news this week, it's exposed to US news with the non-farm payroll on Friday. And we'll see if there's a continuing weakness for this week after this doji on Friday. So likely a pullback to retest the 109.40 40 to 50 area, and if it does break down, it's going to target the 108 or even lower. Okay, so we'll shift the fib to this level here. Let's just check whether there was any continuation move that it has hit. So let's mark this as a new possible start of a retracement. Okay, let's compare this with the US dollar index, DXY. And here's the US dollar index, where it did dip lower past the initial support zone at the swing low, the 100 pip swing low here. And almost reached the next support zone just above the 102 before managing to find support even after gap down lower, managed to climb back up to test the swing low, and then recovered on the Thursday, and largely due to euro weakness more so than the dollar strength because of the Eurozone CPI data. And then another gap down lower on the Friday and attempt to climb up higher, but stall and just consolidated under the 103 level for the week. So this week is a key one with more data from the US before the Fed's meeting in the middle of the month, and there's ISM services, and then Friday's jobs report, and looks like managed to recover to almost climb back up to the start of the week. Let's take a look at the weekly time frame. And it's a long wick, long lower wick, and pushed up higher to close with not quite a doji, but small body spinning top, still below the 102. So there could be some follow through on the bullish momentum to climb back up, but it's going to just attempt to retest the weekly 55 EMA where the 78.6 fib is. So let's move the interim support to the swing low at the 100 pip. Let's take this one out. Support is still at the 102. Interim resistance now is at the between the 104 and below that the daily 200 EMA, and right above that is the significant resistance at the 62 fib and the 55 EMA. So let's see if it's just going to consolidate for this week, or whether it's able to break out higher, at least to test the daily 200 EMA. And to see if there's also follow through with the inverse correlation with the euro. So the euro will need to sink lower in order for the US dollar to climb up and recover. Okay, so key news week for the US dollar, and we'll have to watch the price action between the euro and the US dollar index, as well as spot gold, which has also retested the year's high and the all-time close to the all-time high. All right, let's move back to the other pairs. Moving on to the cable. After spiking through the 127, pull back. And then on Friday, it pushed back up, closing above the 127 again. So it's still on a bullish track. And we take a look on the weekly time frame. It is coming up closer to the weekly 200 EMA. So see if it's able to crack through that and test this swing high, this 100 pip here. Now we can also test to see whether it has reached any significant levels here, and we okay, it's still can still use this from the breakdown from the bullish channel or from the bearish channel here. All right, let's shift this now to the next significant resistance. It's all closer to the swing high here at just above 128. Interim support, we can leave it at the 786. Let's move this out. That will be our next key support at the 50 pip. We could actually move this interim support lower to the 125 and the 62 pip. So no UK news this week, is just exposed to the US dollar news. And let's see if it's able to test the swing high. It was at 128, and then consolidate, or whether it's going to pull back if the US dollar does recover further. Then there could be a retest of the 125 zone here. Okay, critical for the US dollar price action. And if we zoom out further to take a look at this support level, goes all the way back to this swing low here. That's a critical break higher. All right, let's move on to the Aussie dollar. And a key week for the Aussie dollar with the RBA rate decision, where they are not expected to increase rate anymore, with the lower than expected CPI data last week. There's also Australian GDP figures, and then exposed to US dollar news. So it looks similar to the cable, but with a stronger pullback and a bounce off the daily 200 EMA, and climb targeting the 67 now. It's cleared the 66 round figure already. It was this recent swing high. Let's take a look at the weekly time frame and see how strong this move is going to be. And yes, it's broke through above the daily weekly 55 EMA. A very strong bullish close here. Now we'll see if we need to move this fib higher to possibly this area where it aligns with the 67 round figure. That's the 78.6 fib. And that's the other channel that it fell from. So that is going to be our resistance zone, 67 and then 786 fib, and support is going to be at the daily 200 EMA, with the major support below that at 65 round figure, and as well as the 38 fib. All right, so also a critical week for the Aussie dollar. It has been a strong recovery. And taking advantage of the US dollar weakness, but we'll see how far the US dollar is going to recover this week. and we'll have to watch for the news, especially the jobs report at the end of the week. Okay, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.